Hello guys, welcome back to another Lumley training video. In this one we're going to be looking at C3.AI ticker AI. So to get straight into it, now recently they did have a strong move. Obviously you can see we went from a low of just under $17 all the way up to a high of just under $50. So mega moves happening on this stock, and I think a lot of this is just down to them really having that AI name. And since we had all that AI hype, we're continuing that move. You can even see here, they had their earnings, and the earnings weren't really anything too special. It's why we sold off of that news. But again, the AI hype is still there. So you're still seeing this move get bought into, and we keep continuing and are able to hold this range. So now we'll go over the key levels and what I'm paying attention to on AI. So as of right now, to me, there is no trading opportunity. And the reason I say that is really between the range of kind of 42.50 and 30 or even 32.40, you're coming into the range of the first deviations and then also statistical means. So coming into this range, really we're at somewhat of fair value. So really either trying to short here or get long here. Unless you're looking at it from a day trading perspective, there can be quite a lot of risk on the table, maybe not a great risk to reward. So to me, I'm kind of ignoring the stock where it is now, and instead I would be more patient. I would even wait for it to break through the 43.70 because we've already hit these levels quite recently. So instead, what I'd be waiting for, if we're looking at a move to the upside, I'm paying attention to $51.25 to around $51.50. So this is the second deviation on the 6 month and the third deviation on the 1 year at this level. If we start coming into this area, we really expect a relatively strong pullback. This is exactly what we saw happen here. The deviations moved before they were here. We hit these levels. We got that massive sell-off. So if we come to retest it again, basically looking for that same trading opportunity. So it means if I'm a long bias trader, that's going to be really my final and key target. If I'm a short bias trader, really looking to get short in this level and trade it down to a minimum really of around 43.70. So on these, I like it because again, you can get some really good risk to reward. If we're day trading it, or we're trading the shares, you know, we could probably just have a stop above $52, $53 and try and trade it down to 43.70 at a minimum. If we're trading it through the options, provides a lot more kind of accessibility. We're probably not going to get squeezed out because what we can do is we can take risk defined strategies. That means we could mean short the shares and we buy the call. So even if the stock flies, we don't have to jump out. Because again, even if it does, it will probably be short-lived considering we would be breaking above this third deviation. When we break above it, that tends to be short-lived and you tend to see the stock pull over. So that's why I like when we can get stocks at these highs and when we can play them on the options, because then we can play it out, say, look a month out. And so even if they do temporarily squeeze above this level, we know 9 times out of 10, they're going to quite quickly come and trade back below that level and ideally start to reverse coming into those levels. So that's kind of what I'm paying attention to, is if we can push up, that range is going to be my key one, again, around that 51.50 cents. That's where I'm looking to get short buys if we can come into here. And again, if I was holding any position long, I'd be using that as a target. Now, if we did break that, and again, this could be a very quick push because again, these we would use probably at least a month on the options. But if we start to break through here, we continue up, then that final target we could see this stock going to is $60. This is the third deviation on the 6 month, and it would be very, very rare for the stock to hit or even break at this level. If it breaks, again, I'm looking at least a month out on the options, trading that short bias, because we can usually get a 1-to-1 at a minimum, if not a better risk to reward to play a short bias, and the chances are it's going to fall back below that value. And like we've seen time and time again with AI, when it hits these overbought areas, we start to sell off. So that's exactly how we're looking to trade it. So to me, that's my trading opportunity. If we push to the upside, looking to play the 51.50s and $60 if we hit them. If we kind of continue to trade where we are or we break to the downside, to me, I'm not paying attention to this stock. I think it's more of trying to short the hype when it comes and then waiting for that hype to die down and playing it back more into a realistic value. That's how I'm looking at this stock. Let me know how you're looking at it as well. Hope you enjoyed the video. If you did, why not drop a like and subscribe. Hope to see you next one, and that's it. Peace.